The catalyst and current state. Today, we stand at the precipice of a monetary revolution. Across the globe, central banks are grappling with a profound question. What is the future of money itself? Our financial landscape is being quietly, yet fundamentally, reshaped by central bank digital currencies, or CBDCs.
Pilot programs are underway in over 100 countries, ranging from proof of concept to advanced trials. These aren't cryptocurrencies in the volatile, decentralized sense. Instead, CBDCs are digital fiat money issued and backed by a nation's central bank.
For many of us, the idea of digital money isn't new. We're already tapping our phones to pay. But the thought of a government-issued digital wallet, one that could potentially track every transaction, does raise eyebrows. Will this truly make my life easier, or is there a hidden cost to this convenience?
Central banks are primarily motivated by the promise of greater financial inclusion and payment efficiency. They also seek to maintain monetary sovereignty in an increasingly digital world. The rise of private cryptocurrencies and stablecoins has accelerated their urgency.
This isn't just a technological upgrade, it's a redefinition of financial power and control. It probes the very nature of trust in our economic systems, underlying structural drivers. To understand CBDCs, we must first grasp money's historical evolution. From seashells to gold standards, money has always reflected underlying societal structures. Now, we confront a pivot to natively digital government-backed currency.
The technical architecture typically involves either a retail CBDC, directly accessible by the public, or a wholesale CBDC, restricted to financial institutions. Many designs leverage distributed ledger technology, offering immutable records and enhanced security. These systems promise near-instantaneous settlement times and reduced transaction costs.
My parents remember paper paychecks and visiting a bank branch every Friday. Then came credit cards, then online banking, and now mobile payments are ubiquitous. Each step digitized our finances, but always within existing commercial banking structures. CBDCs represent a different leap, potentially cutting out traditional intermediaries.
The core mechanics seek to address systemic vulnerabilities. These include the slow, expensive nature of cross-border payments. They also aim to mitigate risks associated with privately issued digital assets. From a governance perspective, CBDCs offer central banks unprecedented visibility and control over monetary supply.
This shift potentially realigns the roles of commercial banks, governments, and individual citizens within the financial ecosystem. It's a foundational rethink, institutional and consumer divergence. The global race to implement CBDCs reveals a fascinating divergence in priorities and concerns. On one side, the promise of efficiency and control. On the other, profound questions of privacy and autonomy.
China's digital currency electronic payment, or DCEP, is the most advanced, already in extensive public trials. It aims to enhance domestic payments, but also offers a strategic advantage in a future multipolar financial world. In contrast, the European Central Bank is proceeding cautiously with its digital euro exploration, emphasizing privacy and user choice. The U.S. Federal Reserve remains deliberative, citing potential impacts on financial stability and the dollar's global role.
The prospect of programmable money is both intriguing and unsettling. Imagine receiving stimulus checks that can only be spent on specific goods or expire within a certain time frame. While it could tackle inflation or promote certain industries, it also feels like an infringement on personal financial freedom. What happens if the internet goes down and my digital money becomes inaccessible?
Institutional players are bracing for significant disruption. Commercial banks fear disintermediation, potentially losing their deposit base if consumers shift funds to central bank accounts. Corporations must prepare for new compliance frameworks and payment rails. Geopolitically, a successful CBDC could bolster a nation's economic influence and provide an alternative to the dollar-dominated settlement system.
The tension between sovereign control and individual liberty is nowhere more apparent than in the debate over CBDC design. Finding a balance will define this revolution. Forward macro projections. As we look ahead, the global financial landscape appears poised for fragmentation and innovation. A future where multiple CBDCs coexist is increasingly likely, each reflecting its nation's values and priorities.
Interoperability will be paramount for cross-border transactions, requiring new international standards and agreements. We could see the emergence of stablecoin-like CBDCs pegged to baskets of commodities or currencies. The risk matrices include potential for new forms of financial crisis if not managed carefully, particularly regarding cybersecurity and systemic resilience.
In a fully digitized future, financial inclusion could genuinely expand for the unbanked, a powerful positive. However, the digital divide could also widen, leaving behind those without access to technology. For everyday citizens, convenience will be weighed against the persistent shadow of surveillance and control. Our ability to transact privately, a fundamental right, hangs in the balance.
Governments face strategic choices regarding their CBDC implementation. Will they prioritize privacy-enhancing features or opt for greater oversight and programmability? The long-term implications for monetary policy tools, such as negative interest rates or direct transfers, are profound. International cooperation will be essential to prevent a chaotic, fragmented digital financial system.
The CBDC revolution is not merely about how we pay, but about who controls the flow of money. It challenges long-held assumptions about privacy, sovereignty, and the very architecture of global finance. The decisions made today will shape our economic future for generations.